Good morning, traders. It is Monday, the 7th of November, 2016. It's 8:01 a.m. Chicago time. Thanks for joining me. This is another Trader Bite, early nourishment for your trading mind. Again, the purpose of this broadcast is not to influence your own trading plan, but to set out a repeating and methodical process of approaching your planning for the day. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The key things to keep in mind from this morning, of course, I'm sure you heard the news on Hillary Clinton. The FBI had released a comment around 4 p.m. Eastern yesterday, an hour before the markets opened, conveniently. That basically said the review of Hillary Clinton's emails has not changed the original conclusion that she should not face criminal charges. The betting services on the US election in the UK increased her probability of winning to around 80% currently. A pretty big pop up on the open, gap up on the open across the board in the US and across the globe. Again, the market, what does that have to do? What does the market have to do with politics? You just have to keep in mind that the market does not like uncertainty. When there is uncertainty, people move out of equities into the US dollar or treasuries and gold. And that's what's been happening all week last week because of the news on the week before. So that's the key news. The second thing you need to remember is that tomorrow is the US general election, presidential and congressional election. The expectation for tomorrow, and as I'm sure you've received maybe a notice from your broker or clearing firm, the expectation is for high volatility as the results come out in the evening, depending on exit polls and so on. My expectation is that I'll be trading the overnight session tomorrow night on the reopen, and will continue to do so until a winner is declared for the U.S. Presidential election. So those are the things that are likely to drive us here for the next day or so. And then other than that, there's the week holds a fair amount of releases. The key of which is to note that every day this week there will be a Fed or ECB speaker, except for Friday. The key releases that are coming out are coming mainly from Europe, but we also have retail sales, labor market conditions, and so on. We have various numbers. I suggest you check out a calendar online to find out what that is. The key number for the week is the University of Michigan on Friday. But we are getting CPI out of China and across Europe, so it's likely to also introduce some volatility depending on what comes out. So, point being, a busy week. Do not shoot all your bullets early on. Conserve for later. Pick your spots for the week. Okay. As far as what we've got today, um, today the only thing I have on deck, actually two releases. 10 o'clock Eastern, the labor market the conditions index for October, the prior is negative 2.2. And then at 3 Eastern, we get consumer credit prelim for September at 17.5 billion. And then and then that's really it for the day. There's not much else to talk about. ECB Speaker Lautenschlager in Munich at 11 o'clock Eastern. Okay. Let's switch gears now and look at what we had anticipated for Friday. Friday couldn't have been more wrong. My hypotheses for Friday were completely off. The expectation on Friday, after the multiple days of selling, and remember we hit a record, a 36 or 34-year record as far as the number of consecutive down days in the ES. So we're dealing with a second or third standard deviation aberration on Friday. Um, The expectation on Friday is for a push up for us to trade the range of Thursday, which was a stretch day, and that didn't happen at all. I expected a retest 2092 from below. That was hypo one. Of course, that was completely wrong. Um, on and then on the second hypothesis, again, my view was to the long side, and the expectation was for us to chop with an upward skew towards 2092, and then ultimately pull back and push up again. Completely wrong. What happened on Friday was very, very unusual on several levels. Clearly, the market is very nervous, but on Friday we pushed down to the IB low. We put in the IB here at 2079. And that was a couple of ticks below the prior day's low, which gave us what we call a failed auction. You see this quick push up. That's a short squeeze, a quick push up on a prior day's significant level. Tells me that I should now start stalking the long side. I don't stalk the long side until day time frame levels hold. I waited for this pullback, and I was looking for the break higher. It finally happened. We had a range extension up. It's a normal variation day. It's what we call a normal variation day. If you don't know what that is, check out webinar 2 on my website. And then the market continues higher towards the 2092, which is what was expected. Remember, the 2092 sat right here. So that was that hit. However, it just rolled right over, and it hit 2079 on the dot. So we had a double IB low, and there's a stat associated with that. Again, past performance not indicative of future results, but the statistic on a large time frame, on a large sample set, says that there's an 83% probability that by the end of the session on a low, a double bottom at the IB low, there's an 83% probability that by the end of the session, this low will be broken. Okay. And what we ended up getting is we ended up getting a test of 2079, and it held amazingly. It held with the point of control near lows on a weak low. There isn't an occurrence of this going back to 2001. There isn't a single occurrence of that happening. The other thing to observe is how boxy Friday's profile is. Essentially, what this is saying is the market is trading full volume across many, many prices, as opposed to rejecting lows, accepting the middle, rejecting highs, which is what we would normally expect, right? Some form of that, either skewed to the top, skewed to the bottom, or Gaussian and balanced in the middle on balance days. But Friday, we had a full exploration of volume across all prices. This is a market that is completely disagreeing or is unable to come to a consensus, and it's driven by this news, political news, fundamental news, OPEC, you name it. It's all happening all the time that we're getting news. By the way, if you don't have some sort of a news feed, it is a minefield out there. And the reason it's not like you can trade the news. I don't recommend you trade the news. In other words, wait for the number and then buy it if it's strong. There are machines that are receiving that on a Bloomberg terminal, reading the words, and then putting the trades on far too fast for a human being to be able to respond. What I use the news for instead, and that's how it was when I first started trading, you can actually rely on a news feed and just trade the actual number and actually get fills and make money. But that game is over. It has been over since 2005 or so. Um, but the news feed now gives you some color on what's going on. It tells you if a move is based on some news that is sustainable or fundamental in its nature. In other words, the auction will continue moving in the direction of the news, or if it's just a blurb that is likely to result in the market coming back to the scene of the crime. In any case, and if you want a recommendation for news, I have a couple. Just shoot me an email on my website. Um, in any case, what we have here is a market that's very jittery, and that's all gone. with the FBI revelation over the weekend. What we ended up with is an overnight high that's at 2102.25, an overnight low, I mean, and an overnight high at 2112. We traded basically 10 points on the overnight and held a gap. So we're going to start out with a gap up on the prior days. Of course, this is not gapping into new territory, it's gapping into the sell-off area. And we did not complete this auction down here, which is very interesting. So there's going to be I'm going to add a flex line here indicating that this is a weak low, an untouched weak low, and we're gapping up and are unable to revert back on the overnight session. We're holding the overnight point of control and continuing higher. Anyway, so that's how things are shaping up. It's again, it's a very odd. If you've ever seen a more bearish pattern here, um, I can't think of any. I mean, the market just drops, pulls back, drops, pulls back, drops, pulls back, drops, pulls back on Friday, and makes a double bottom. This is like a stone on water. The expectation is it's likely to drop, and if there is a reversion, we would normally see a neutral extreme or an extreme high close, meaning drop, clear that low at 2079, pull back, and then unable to push to make new lows, then you get the shift up. That is the normal scheme of a market reversal. It is not on a weak high on a normal variation day up. So again, the point here is I'm marking this area very clearly as an area of interest for the future. Okay. So that's where we are. We pushed through the low volume node. We did not start pushing into the prior balance from the beginning of the year. We're coming back up. And because we are in this condition, I'm going to stop this profile back here and revert this profile back. Okay. And I'm going to generate a new profile starting with the swing high. And the reason I'm going to do that is because I want to see what we're dealing with back on the way up. And the first thing we notice here is this low volume node, and that's exactly where the overnight high is, right in this 2110 quarter area or so. And it's dealing with this low volume node right now. We're stuck in here and trading it. So pushing through here is likely to give us this high volume node, which is in the 2024, 2120 area. And if you recall, the scene of the crime for the Clinton news on the emails was 2134 even. 2134 even brings us back to where the auction was the Friday of the Clinton email news. Okay, so that's basically what I expect the market to be working towards as we push higher. But right now we're scrambling to get through this low volume node. There's you could see where it was formed right here. There's a shelf, there's a ledge below, and there's a ledge above, and we're stuck in the middle, which puts us in a precarious place as far as predicting what is probably going to happen over another. Okay, on the weekly, here's where we see ourselves on the weekly chart. We are continuing this big downsloping trend, and we broke a little bit last week on a very wide range. Last week's range was 48.75. Remember, the common range is 29 up to 53. So overall, the weekly shows that it was getting a little bit extended on the downside. Again, jitters into the election. Let's get down to where we are and where we're expecting to be. If these charts seem really noisy to you, there's a reason why there's so much noise here, and it's because, as you've probably heard, we're hitting record territory as far as volatility, as far as the compression that we've been in since the spring of this year. since Q2 of this year. And what that does is because we're in a compression zone, it starts to consolidate and consolidate and consolidate and compress a lot of levels together, and it creates a lot of noise. So the chart seems noisy because of this, because there are significant areas all along, and it's truly is a minefield. So, but the expectation for today, I'm looking for an open auction out of range. I'm expecting it to fight where we are now, but I'm expecting it to start pushing lower and taking back some of this news-based move. I expect for it to continue pushing to around 2092 today, and then it'll likely reassess and then start to push up. I'm expecting this gap zone to be taken out. If we open up here at 2109.50, 2109, it leaves us with a 15-point gap zone right here, and a lot more in terms of gap fill all the way down at 2070, 2079.75 is Friday's close. That's a very, very low probability fill. Would love to see it fill, but we're likely to end up with a responsive move lower as those who made profit overnight on the backs of shorts uh, start to sell as well and push the market lower. Alternatively, it opens up, attempts to push lower, is unable, and then starts moving out of this LVN zone. This is not a high probability, and the expectation is it's likely to push through to 2124. 2124 would be the target on the upside. That would be hypo 2. Okay, so that's where we are right now. Again, hopefully you're picking something up every time you watch one of these, and you're taking something with you. But what today tells us is we are in a zone in between. It's likely not to be a typical Monday. We're likely to test lower, and we're likely to see a little bit of volatility, although volatility has compressed given the rally. But I expect some movement. So wait for the market to set up. I suggest you sit out the first half hour. Determine your job is to determine who is likely in control. Look for a pullback and an area of compression to trade against, and then go in the direction of which side is dominating the move. And you can measure that with rotations. You can measure it with your delta volume, your moving averages, whatever you use. It doesn't matter. Just make sure you identify an edge before you jump in. Don't feel compelled to trade just because the market is moving. Okay, the market can move, and it may be against you. So be careful. Save your bullets until a little bit after the open. Okay. Good luck, and I'll catch you tomorrow morning. Take care.